Hello, and welcome to this video on the 2008 real estate market crash. The 2008 financial crisis was a significant event that had a lasting impact on the economy and the real estate market. In this video, we will discuss the causes of the 2008 real estate market crash and its effects on the housing market. In the years leading up to 2008, the real estate market experienced a significant boom. Housing prices were rising rapidly, and there was a high demand for mortgages. Lenders were offering loans to people with low credit scores and little to no down payment, which meant that people who previously would not have been able to afford a home were able to purchase one. This led to a phenomenon called subprime lending, which is the practice of offering mortgages to borrowers who do not qualify for traditional loans due to low credit scores, a high debt-to-income ratio, or other factors. These subprime loans were often packaged together and sold to investors as mortgage-backed securities. The problem with subprime lending is that many of these borrowers were not able to make their mortgage payments, and when the housing market started to decline, many were left with homes that were worth less than what they owed on their mortgages. This led to a wave of foreclosures and a significant drop in housing prices. At the same time, the banks and financial institutions that had invested in these mortgage-backed securities started to suffer losses. Many of these securities were highly leveraged, which means that a small decline in housing prices could result in significant losses. This led to a wave of bank failures and a crisis in the financial system. The 2008 real estate market crash had a significant impact on the housing market. Housing prices dropped significantly, and many people who had purchased homes during the boom found themselves underwater, meaning that they owed more on their mortgage than their home was worth. This led to a wave of foreclosures, which further drove down housing prices. The real estate market crash also had a ripple effect on the wider economy. The financial crisis led to a significant recession, with many businesses closing and unemployment rates once skyrocketing. The stock market also took a significant hit, with many investors losing a significant portion of their savings. In response to the crisis, the government implemented a number of measures to stabilize the economy and prevent future crises. The Dodd-Frank Wall Street Reform and Consumer Protection Act, for example, aimed to regulate the financial industry and prevent some of the practices that had led to the crisis. In conclusion, the 2008 real estate market crash was a significant event that had a lasting impact on the economy and the housing market. The boom in subprime lending and the subsequent wave of foreclosures led to a significant drop in housing prices and a crisis in the financial system. While the government implemented measures to prevent future crises, the effects of the 2008 crash are still being felt today.